Okay, good afternoon, everyone. Bon après-midi, tout le monde. Thank you for coming. Mr. Carney will be happy to take your questions for approximately the next 20 minutes. We do have some wireless handheld mics that my colleagues will be handing out, so if you can just raise your hand and indicate your interest in asking a question, and I'll make sure that we get through everybody. We'll ask for a question and hopefully a very quick and direct follow-up so that we can get through everyone. Libre à vous, bien sûr, de poser vos questions dans la langue officielle de votre choix. And if we're ready with a microphone on that side. Oh, we've got a lady at the back to start.
CTV National News. A new report by the Parliamentary Budget Officer says that the size of the government has been expanding rapidly and the total compensation for public servants far outpaces the private sector. We're wondering what your thoughts are. Do you think the size of the government is getting too big?
Well, I haven't seen the report from the PBO. We do track wage settlements across the country, and I would note that in aggregate, wage settlements in the public sector have not been running at a particularly rapid pace. And in fact, once you combine wage settlements, both public sector and relatively modest growth in the private sector, that's one of the factors which is a moderating pressure on inflation in Canada, despite the relatively strong employment outlook. So I think when you look at it as a whole, that's not what one is actually seeing in aggregate in the macro statistics. But again, I haven't seen the report. It may be talking about a subset of the government. I just can't directly comment.
Thank you.
Thanks.
Got Greg Quinn next, and then this gentleman at the back, Richard.
Governor, how much of your speech today on communications and guidance applies to, could be carried over in thinking to the way the Bank of England operates? And can you talk a bit about the dangers of low global policy rates that you mentioned in your speech? Okay.
Well, let me say that on the first one, not necessarily anything, because not necessarily anything or everything, if you will, because the speech was in general about central bank communications. I used some specific examples, both from ourselves, by reference to banks like the Reichsbank and the Norges Bank and others who publish an interest rate path, and what the Fed has done in recent meetings in terms of refining guidance and a very useful, in our opinion, my opinion, refinement of guidance. And then I just took the logic to its next extreme, or to its full extreme, potentially with a framework change. But that's not signaling anything. It's not guidance. It's not just not guidance about the stance of monetary policy in Canada. It's certainly not guidance about the stance of monetary policy anywhere else. And with respect to your second question, yes, without question, a low-for-long interest rate environment creates financial stability risks, and they can manifest themselves in various ways. Here in Canada, we have had consistent concerns, as you know, around household debt. It necessitates, as I said in the speech, a coordination between the various authorities that have responsibility for the macroprudential levers. In Canada, the key lever for our situation is determined by the Minister of Finance. He takes advice, obviously, from his department, from the bank, from OSFI, from CMHC, but makes those determinations. And I think this is an example of very effective coordination, and that the Minister has taken four prudent and timely decisions about tightening various aspects of mortgage insurance rules that are having an effect when taken in conjunction with OSFI's new underwriting guidelines, also having an effect. And in our view, the complementary role of monetary policy, at least in guidance terms, that suggest the possibility, at least, of higher interest rates.
Got Richard Edgar at the back, and then Paul Bagnall up here.
Governor Richard Edgar from ITV News in the UK. What lessons will you take with you from Canada to the Bank of England?
Well, I'd like to be slightly careful about answering that question, if you don't mind, Richard, because I think my comments about the Bank of England and that role are best first delivered to the Treasury Select Committee given their role, and we're working with the committee right now to find a date in the new year that works for both of us. So, so I'm going to answer a very general way, and not necessarily transposing it to anything at the Bank of England. And I'd reinforce my point that I made to, I think, Greg Quinn's question on the speech. There are experiences of crisis management that that we had here in Canada, and much is made in Canada of we didn't have bank failures and we didn't have other issues. Well, in part, we didn't have those because we made tough decisions in a timely fashion. We were transparent about, I feel we were transparent up front about the scale of issues, including, for example, in the asset-backed commercial paper market, which were considerable in the country, we're up front, that we developed plans. And so the first thing is transparency. You have to level with people on the scale of problems. It does no good to try to spin your way out of a crisis, if you will. Secondly, the importance of having a plan, explaining that plan, and then executing that plan. I mean, Tim Geithner always says plan beats no plan, and that's absolutely right. Someone has to take a decision, take control, and we played a role in that. And I would say further that we had very strong coordination amongst, by tradition and in the breach, amongst the major authorities, so between the bank regulator, the bank, the Treasury equivalent here, even though we didn't have formal mechanisms for that coordination. It was just, it's the nature of the interaction, so we were able to put that into effect to good effect. The broader points I would say that on monetary policy and financial stability policy writ large, I think one of the strengths of the Bank of Canada, I know one of the strengths of the Bank of Canada, is the breadth and depth of talent in the institution, and as a governor, the importance of listening to diverse points of view and synthesizing and within that institutional structure, either a path for monetary policy or a path for financial reform for other things. So those are some of the aspects that worked here in Canada. Last thing I would reinforce, which the speech referenced, was basically the power of the flexible inflation targeting framework that we and many others practice, and its suitability for these times, for both normal times and times of crisis. But in order to get the most benefit from that framework, transparency, communications is absolutely crucial. And there's ways to use communication to potentially amplify that power in extraordinary circumstance, which may be appropriate in some jurisdictions, not appropriate in other jurisdictions. And one has to explain it. So those are general lessons, which are not necessarily directly applicable to the Bank of England, because, as I said at the outset, I really don't want to be specific. I hope you understand. I don't want to be specific about that because that just doesn't respect either the Treasury Select Committee or the very excellent sitting governor, Sir Mervyn King.
Could I just ask very briefly then, in a related question related to your speech,
yeah.
Why might it be necessary, and this is for a general audience,
yeah.
If you could please, but why might it be necessary for a central bank to change its framework to nominal GDP targeting?
Yeah. Well, we looked at this by way of background. We renew our what's called our inflation control agreement with the Government of Canada every 5 years. The bank does. And we this time last year, we renewed it for the next 5 years. And in the run-up to that renewal, we looked at this question in great detail. This was the focus of our research, price level targeting or nominal GDP targeting. And the potential advantage of it is that, as I said in the speech, is that bygones are not bygones, and you make up for past misses on the path of nominal GDP. So GDP, real GDP growth, which is what we normally think about in growth, and then the inflation component of GDP. That so-called history dependence, you care about where you've been in setting the policy for the future, can, if expectations are formed effectively, reduce output volatility and provide better output outcomes, including in an environment in an environment of deleveraging, fiscal deleveraging, household deleveraging, other aspects. But the challenge is, and the reason we didn't pursue it in Canada ultimately, was was twofold. One, we have a very successful flexible inflation targeting regime here, so why change? And secondly, that it really does matter how expectations are formed. People have to understand what you're doing. And if not enough people understand what you're doing, then its utility is diminished, and potentially, in the extreme, can actually be inferior to flexible inflation targeting. So there's lots of really wonky, somewhat dreary research behind all of those statements that we've done, and I'm happy to furnish to you. But I raised it, and the last point, I guess, is why did I raise it? I raised it because it's the logical extreme of what I was talking about. I mean, if you move from a conditional commitment, which is what we did and what the Fed has started with, if you move towards a threshold type guidance, which is partially so-called tying the hands of the central bank, so that when the economy recovers, stimulus will remain in place unless that threshold is achieved, and that knowledge brings stimulus forward in time, because the understanding of the real interest rate would be lower than otherwise it would be. That would be the expectation of market participants. Then the moving beyond that, in my view, you would have to change the framework, which isn't a minor thing. It would be a major adjustment, and would have to be considered carefully, and would have to be weighed against proper conduct under flexible inflation target. So that's why it's in the speech, as opposed to any signaling or guidance of any particular preference.
I've got Paul, Indira, and then Solarina at the front. Okay.
Hi, I'm Paul Bagnall with Business News Network. Governor Carney, there's news today of a large settlement between the Department of Justice in the United States and HSBC Bank over money laundering activities at that bank. And as you know, there's also an ongoing probe into allegations of LIBOR manipulation at numerous large financial institutions. I'm just wondering, what are your thoughts on how much progress regulators or perhaps banks themselves have made in recent years at preventing that type of conduct by very important financial institutions?
Yeah, well, I think the first is to recognize that the wheels of justice move slowly, and that, as you're kind of intimating in your question, the events that are behind this settlement happened a while ago. And that measures certainly have been taken, my understanding, within that institution to significantly tighten controls for this and other aspects. Similarly, the LIBOR issues and the conduct around the setting of reference rates, there has been progress. My understanding, we don't enforce this as the Banque of Canada. It's a really market conduct issue for market conduct regulators, that there has been progress in the setting there. I think this goes to a couple of issues, to be candid. One is are issues of controls within an organization, so that people are doing the right thing and you're aware if they're not, whether it's under any money laundering procedures or on reference rate settings. But it goes beyond that to questions of culture within the institution, so an understanding of the end result of this type of behavior, of being sloppy either or worse about the conduct of either of those issues. And in some cases, people were more than sloppy. They were obviously criminally, well, we'll see the full outcome, but certainly there is allegations of criminal act. So there is, you can fix the controls, you can change the processes, but alongside that needs to be a cultural shift in some organizations, and I'm not going to cast aspersions on a specific one you named, but and that is a longer process that I believe has begun, but needs to fully cascade down through the institutions to remember in the end what a financial institution is for. And it doesn't exist for its own purpose. It exists to ultimately serve the real economy, and everyone's actions in these institutions ultimately have effects on the real economy.
Indira Kannan from Business Standard in India. What's your take on the opinion that loose monetary policies in developed countries are contributing to persistent inflation in an emerging economy like India, where it may be limiting the central bank's options there at a time when a slowdown, the growth has actually slowed quite sharply of late? And second, I mean, is that slowdown a concern in the global context? Because India, along with a few other countries, was considered to be one of the bright spots for growth in the global economy. Thanks.
Yeah, well, let me answer the second part first, which is it is important. I mean, the Indian economy is an important economy in the global context. The slowing this year, coincident slowing for different reasons of the Indian economy, the Brazilian economy, the Chinese economy, has had a notable impact on the advanced economies and the path of global output and inflation. There were different challenges in these various economies, and I don't want to prescribe what the RBI or the government of India should do to address structural and monetary challenges there. You have a very capable governor and Governor Subba Rao at the RBI and a very capable team. So they'll do the right thing. Now, obviously central bankers, the world's tightest mutual admiration society, might take that with a grain of salt, and I respect that. But with respect to U.S. monetary policy, or advanced economy monetary policy, it is in the interests of everybody on this planet that the U.S., that the major advanced economies are growing. Those economies, the major advanced economies, U.S. and Europe, have disinflationary, U.S., Europe, Japan, disinflationary to potentially deflationary pressures that can only be combated by very expansionary monetary policy. And those directionally, those central banks are doing exactly the right thing that's in the interests of their economies and in the interest of the global economy. Canada is the largest trading partner. We're the largest financial intermediary with the United States. If anyone gets the spillovers from loose United States monetary policy, so-called loose United States policy, it's us. We unambiguously, unreservedly recognize the appropriateness of the stance of the Federal Reserve's policy given the forces that are hitting that economy, and we recognize that even with the impact that has on our currency, and it does have an impact on our currency, that it is a net positive for the Canadian economy, and we manage our monetary policy accordingly.
Hi, Celerina with Reuters. You mentioned in your December rate decision that the underlying momentum of the Canadian economy seems to be softer than expected.
Yep.
And given the weak third quarter and the handoff into the fourth quarter, is the output gap closing more like slowly than you had anticipated in the October NPR?
Well, just the simple math of it is that third quarter was slightly slower. Now, remember, it's an annualized number, so 0.6 versus 1% annualized is a relative. We're talking 0.1 basically of a difference, and on an annualized basis, and therefore, anyways, it's a small difference, but definitionally, you're right in that it would be slightly larger, but this is on the margin. That said, the momentum is somewhat softer, as we signaled in our December rate our rate decision, and recent data is consistent with a bit more softness that is there.
Okay. And just a quick follow-up. So at this point, does it change your target or expectations for when that output gap would close next year? I think you mentioned in the October.
Well, we will, we'll provide a full update in January in terms of our forecast, and I think it has to be recognized. Some of the softness in Q3 related to some temporary factors that were pretty material in terms of outages from some oil platforms and other production that's coming back on Q4, Q1. So we have to look through that, and so there will be some payback of that. So we'll try to look to where underlying momentum really is in making those judgments. But we'll provide a full update in third week of January. Thanks.
I'm on 20 minutes here, so we've got time for maybe one or two more questions. Is there anyone who hasn't asked a question yet that would like to? Yeah, Tavia.
Sorry, could you just take the
microphone if you could?
It's Tavia Grant from the Globe and Mail. When you, it's a little early, but to think about your legacy here,
Wow.
I'm wondering the degree to which you're worried about handing over to the next governor this challenge of high household indebtedness, and just any further comments on that based on any recent data you may have seen, because I know you've already talked about that a lot.
Yeah, no. Well, obviously legacies are determined by others, not by yourself. And secondly, what would be entirely wrong is to manage policy to my horizon as opposed to the right horizon to have for the optimal policy horizon. So we're not going to try to cram a bunch of decisions into the next 6 months. On household indebtedness, a number of decisions have been taken. You're familiar with all of them, both by the government, by OSFI. We have a tightening bias. A good chunk of the speech was explaining, putting that in as clear a context as possible, and that should be considered in conjunction with our financial stability report, which came out last week. We are seeing, we've seen starts coming down. They're still slightly above. They're now down around household formation, where we see household formation. We're seeing some overbuilding still in condos, and we've been pretty clear about that. We have seen the pace of household debt accumulation slow as hoped for, as intended, from about 10% to just a little bit more than 4%. We'll see if that persists, but that's positive. We've seen some adjustments in the resale market, which again is positive. But I guess I would just caution that we have seen in the past, when there have been policy measures taken, movement in these variables that are then followed by a reacceleration, and not necessarily seen anything that it would be consistent with that, but we just have to be vigilant. The collective, we have to be vigilant about these aspects and adjust, if necessary, to that if there were clear signs of reacceleration. So we're somewhat encouraged by what we're seeing, that the economy is moving and households are moving to a more sustainable path, both in the housing sector and the accumulation of household debt.
And with that, we're going to have to leave it there for the afternoon. Thanks very much, everyone. Have a good afternoon and happy holidays.